Hello everyone, this is a special lecture on China individual income tax. Nice to meet you again. In Chapter 4, we talk about comprehensive income to tax residents, while in this chapter, we talk about comprehensive income to non-tax residents. To tax residents, the four types of income from wages and salaries, remuneration for personal service, an author's manuscript and royalty are referred as to comprehensive income. However, strictly speaking, to non-tax residents, these four types of income cannot be referred as comprehensive income. They can only be referred as the four types of income. Because although they apply the same tax rate, they do not need to be aggregated for taxation. Here's a summarization for non-tax resident. In this table, this column is types of income, including four types of incomes: wages and salaries, services income, manuscript income, and royalty income. And this column is methods of tax assessment. For wages and salaries, the methods of tax assessment is withholding on monthly basis. And for others, the methods of tax assessment are withholding on one-off basis, not monthly basis. This column is taxable income. For wages and salaries, taxable income is month's income minus the personal standard allowance RMB 5,000. On services income, the taxable income is income per transaction minus 20% deduction. For manuscript income, the taxable income is income per transaction less 20% deduction, continue to less 30% deduction. For royalty income, the taxable income is income per transaction less 20% deduction. This column is applicable tax rate table. The applicable tax rate table for these four types of incomes is the same. There are tax rate table for comprehensive income on monthly basis. So we can draw a conclusion for this table. For non-tax residents, each calculation of IET is based on each month or each transaction and is an independent withholding, not a provisional withholding. Moreover, it does not need to perform annual assessment. So let's study them separately. Firstly, let's have a look. How do non-tax residents calculate and pay individual income tax on their income from wages and salaries? The key points is as follows. The first point, monthly allowance on wages and salaries for non-tax residents is RMB 5,000. And the second point, no specific deductions and specific additional deductions for non-tax resident. Instead, he or she can enjoy 8 items of tax-exempt benefits for foreigners. The third key point, bonus for several months received in 1 month by non-tax residents in China. The tax treatment issue for tax residents who receive several months of bonus at once, as well as for non-tax residents. So, what's the difference between them? Let's have a look. For non-tax residents, the bonus is treated as taxable employment income in current months, but not combined with current taxable wages and salaries. Instead, the treatment as follows. The first step, dividing the amount by 6 to determine the applicable tax rates according to tax rate table or comprehensive income on monthly basis. And the second step, Tax payable on bonus is the whole bonus divided by 6 times applicable tax rates minus quick deduction factor times 6 again. Let's think about the formulas. Why the bonus is divided by 6 months? That's because according to definition of non-tax resident, a non-tax resident residing in China no more than 6 months. We divided the bonus by 6. We also need to know that the tax calculation method for bonuses is different between tax residents and non-tax residents. For tax residents, they have 2 options. One option is to combine it into the current month's wages and salaries, and the other is to calculate IIT on it separately. And different from this, non-tax residents have only one option, which is to calculate IIT on the bonuses separately. Besides, even if the tax resident and non-tax resident all choose to calculate IIT on bonus separately, the formulas for them are different. Tax residents average their bonuses over 12 months, then multiply all bonuses by the applicable tax rate and less the quick deduction factor. While non-tax residents average their bonuses over 6 months, then multiply the monthly average bonuses by the tax rate and less the quick deduction factor. Finally, times 6 again. Do you understand? Well, let's look at an example. In this example, Mr. Lee, a non-China tax resident, has been working in an international school in Beijing. In December 2022, he received the following income. Salary of RMB 50,000. Bonus of RMB 80,000 for her 4 months employment. Required. Calculate the individual income tax payable in December. Let's look at the answer. Firstly, we calculate IIT withheld on Mr. Lee's salary. Employment income for tax resident is monthly basis, so only income in December is 50,000. Less monthly allowance, only 1 month, so it's 5,000. Taxable income is 50,000 minus 5,000, the value is 45,000. According to tax rate table for comprehensive income monthly basis, we got applicable tax rate is 30%. Quick deduction factor is 4,410, so IIT payable is 45,000 times 30% minus the quick deduction factor, the value is 9,090. Then, let's calculate IIT withheld on Mr. Lee's bonus. On bonus, firstly, dividing the whole bonus by 6 to determine the applicable tax rate. So, the whole bonus 80,000 divided by 6, the value is 13,333. According to tax rate table for comprehensive income monthly basis, we got applicable tax rate is 20%. Quick deduction factor is 1,410. So IIT payable on bonus is 13,333 times 20% minus quick deduction factor, then times 6, so the value is 7,540. That's all for this example. Now have a look. How do non-tax residents calculate and pay individual income tax on their income from services income, minus income, and royalty income? The calculating RIT for these three types income is very simply. We just remember the following two formulas. The first formula, RIT payable for services income and royalty income on each time basis is gross income less 20% deduction, then times applicable tax rate. And the second formula is RIT payable for manuscript income on each time basis is gross income less 20% deduction, continue to less 30% deduction, finally times applicable tax rate. The only difference between these two formulas is that when calculating taxable income, the manuscript income is additionally offset by 30% once. Okay, by this time, we've completed all the content of this chapter. Let's briefly review it. For non-tax residents, each calculating RIT is based on each month or each transaction, and is an independent withholding, not a provisional withholding. Moreover, it does not need to perform any assessment. Thanks for watching. See you next time.